funds, but is this your company here, Kurt? Ivory Hill?
Yes. Yep.
Okay.
Yep. Ivory Hill. Yep.
All right. So you manage pension funds there and retirement accounts, et cetera, right?
Yeah. Correct. So yeah, a lot of pension funds, 401ks, and high net worth individuals is
Okay.
primarily who I work with. A lot of
Okay.
entrepreneurs and
Uh,
whatnot.
why why did you choose the elephant for a logo?
Uh, that's actually a really good question. I'm going to ask that a lot. But when I kind of broke off from my previous firm, I, I actually didn't launch for about a month or so because I really wanted a name that meant something to me, and
Yeah.
also something that I could add multiple lines of business to, et cetera. So Ivory Hill. My mom actually was kind of retired. She actually went through like our full family tree, put a bunch of work, hundreds of hours into it, and found out that I have like a great uncle who actually kind of came over from Germany and kind of settled in Ivoryton, Connecticut.
Okay. All right.
And actually worked for a short period of time in the import export ivory business. So
Wow.
I kind of really liked that name. And then so we kind of went with the elephant for the logo. Yep.
Okay. And the elephant has a good memory, so you can't revise your forecasts because you'll remember because the elephant will remember what you said, right? So yeah, I mean,
Oh,
compared to, huh? Go ahead.
I'm
Anyway, you look. I was going to
oh,
ask.
I'm constantly revising my. Oh, you're cutting in now a little bit on here.
I am because you have been.
Maybe it's me then.
All right. Well, why don't we do this? Why don't we talk about? I mean, to me, everyone looks young, right, Kurt? But I think you're fairly young. And what's interesting to a lot of viewers is what first drew you into the financial markets? When did you first develop an interest in it and trading, and perhaps even your first job? Was the last firm you were with your first job of collecting assets and managing assets? Tell us a little bit about your history.
Yeah, so kind of the genesis is I was actually interviewing at UBS. That's where I started out. Actually thought I was interviewing for an investment banking job, and it turned out it was a wealth management internship. Um,
Right.
and I ended up kind of getting it, and it was like, well, I'm gonna go ahead and do this, and kind of through that process, what I didn't like about the business is pretty salesy. At that time, not so much in selling people whole life insurance products that they don't need, but more of as it was just all about asset gathering. Get
Right.
assets, get them in the door. Charge your 1.5%, AUM fee, throw them in a boilerplate asset allocation. Never think about it. Move on to the next one because that's what I was trained to do. I had a
Well,
boss one time
we
when I
know
was.
how well that worked, especially what is it, the 70-30, the bond market falling apart. It didn't help people in 22. They took it on both sides. So uh, your interest was in the market, not making cold calls, huh, Kurt? What a surprising thing to find out.
Yeah, yeah, and the fact of the reality is you can't be in this business if you don't have any clients, right? Uh,
Yeah.
so you got to have a little bit, you got to be able to communicate effectively and kind of turn it up a little bit, and in order to kind of gather and actually build a business, obviously, because with compliance and whatnot, it's not like you can post a lot of stuff online too well, but nowadays, now that I got my own firm, that's kind of out the window. Kind of do whatever you want for the most part, as long as it's within the confines of ERISA and the SEC.
Yeah. I remember we used to go up to new guys in the business, and I came up that way too. And we would say, "How is your client? How is your client doing today?" All right. So you took that job. How long did that last, and how did you move into more of the analytical side of the business? Uh, what opened the door for that for you?
So our team left UBS, and I was actually kind of the bottom of the totem pole of that team. And we went and started our own RIA, kind of a private, kind of what's more popular these days. For those who don't know, Wirehouse is like kind of private banking, and UBS, Goldman Sachs, you name it, that type of bank, to more privatized wealth management firm. So me being the lowest man on the totem pole, I set up the entire infrastructure of the firm. I set up, our trading softwares, financial planning softwares, onboarding, paperwork, that type of stuff. So that really, I guess, kind of drew me into it because I feel like I was part of something that was growing. Um, and until I got into the a little bit, well, probably 4 or 5 years before I really got into the analytical side and I started actually managing people's money, neighbors across the street that I grew up with, people that used to
Yeah,
drive me to hockey practice every day. And then it was around probably the 2018 when the kind of the Fed kind of taper tantrum deal
yeah,
during that, and I had clients calling in. Well, really, it started, I think, with when Obama got elected the second time. The Dow dropped about 500 points the next day, and you had clients calling in uh, like the world was ending. Now, 500-point drop is, pretty standard intraday move
right.
for the most part. So I started looking at what we were doing because, like I said, we were in buy and hold kind of boilerplate type portfolios, like you said. One of the reasons why I hate target date funds is because of core bond, and the conservative strategy has probably done the worst in that kind of setup. So I started going through a journey of, okay, I need to figure out how to do this because there's got to be a better way than just talking clients off the ledge. Every time the market's down, hey, this is a long-term investment. The market will come back eventually, and we just got to stay the course.
That's
Well,
what people are hearing now, Kurt.
yep. Yeah. So it's this kind of standard bear market rhetoric. And I got sick of not knowing a lot about this game, not knowing. Cause again, I was told many times, you're not, I don't trade. I don't pay you to manage money. I pay you to go bring in clients, bring in assets. And that really, so I kind of went through a journey, started looking at, active investment managers, who can I use, SMAs. And then what I figured out is that, the styles that I really, really liked, where good, probably start with like momentum managers. And what they're really good at doing is getting super concentrated in a risk on environment and being very quick to sell in a potential risk off environment. That's how, in over time, while signaling isn't always perfect, over time, you usually will kind of beat whatever benchmark you're trying to do just through that. And then I got into
Okay.
intermarket analysis, a little bit of technical analysis there to really
Did you
learn.
have any mentors or books that strongly influenced you in your style?
Yes, actually, one of the books that I highly recommend anybody read that wants to get into this game is Intermarket Analysis. I believe there's two books on it. The book that I read was
To Murphy?
actually is Michael Guyad.
Oh,
Um,
yes, I know
Yeah.
Michael.
Yeah,
Hmm.
yeah, his father wrote a book. It's very outdated now, so maybe Murphy's might be a little bit more updated, but some of the indices in that book aren't exactly on point for today. But
Right.
that really kind of resonated with me on, how to identify, possible early indicators of volatility, and how kind of market cycles work.
Michael's still waiting for a bond rally?
Is Michael still what?
Waiting for a bond rally.
Yes, he is. Yes, he is. He's
Okay, well, do you think the market's finally in a position, Kurt, for that to happen? I mean, picture speaks a thousand words. So you're friends with the guy. You don't like cookie cutter type of portfolios. I have to ask you this since, it is an important part of portfolios, no matter what your allocation is. But here's TLT, which, I use as a proxy for the bond market. And I know a lot of bomb bulls for the last year, and they're not rewarded. They haven't been rewarded. In fact, in my career, and you could probably tell I've been around for 5, 10 years, I can't remember a period where the bonds were this sideways in this kind of range for so long. And as a trader, I was not impressed with the flight to quality rally that we got out of bonds during that sell-off of 20% in S&Ps and 30 or more in NASDAQ. Where are you at on bonds? Do you think these lows are going to hold and bonds are going to start to rally finally?
Yes, I do, but
Okay.
caveat, I've been wrong on this before.
Okay. Well,
um,
we're all wrong. So where would you be wrong? Back under 85? That would be a pretty negative signal, wouldn't it?
yeah, I would agree. And I think you want to be in bonds if inflation is coming down rapidly or a recession is imminent. And I think we're right there. I think we've had a couple inflation reports print cold. Next month's report should also print cold as well. So I think that'll be good for bonds. I think after that, it's going to be, I don't think after that, I think we probably get a few hot inflation reports for a short period of time. So I think you can see bonds come back down. So I think I'd like to, if you're going to trade bonds, I think that makes a little bit more sense.
Okay.
You are a long-term investor. I think it is a pretty historic buying opportunity in
Okay.
TLT.
Okay. Did you feel the same way around 4,800 in the S&Ps? I want to ask you, because you talk about your style, momentum style,
Hmm.
where was it that you also publish, write, edit the risk signal report? So I'm curious. We have some recent history to
Yeah,
talk
so it was
about.
March 7th. Yeah,
March 7th,
March 7th, we our long-term momentum signal flipped red. So we started raising cash
right
at
here.
that time. Yep.
Okay. All right. So it's not early, but at
Yep,
least you
right
didn't
there.
get caught in
So that's
this.
when we started raising cash, taking some.
Yeah.
Well, I do carry a little bit of equity in the portfolio. So we're getting beaten up, kind of like everybody else. So we're holding, right now, I think we're holding about 20% or so in equities, just broad-based ETF, to have some broad market exposure. And I do that just because, when that market turns, I want to be part of
There.
that turn.
Yeah. Do you think this is a low, Kurt, or we could revisit it, take it out in the next quarter or so?
I think we revisit it. I think we revisit. I
Revisit.
think there's a lot of technical breakage that's going on under the
Well,
surface. Yep. I think we at least revisit to at least touch that down.
okay. I'm a momentum guy too. RSI is a very important part of my work, and I've even renamed it to the real simple implicator. And I've rarely seen markets bottom when momentum is confirming price. And that's exactly what it did down here. So it could be a low, but
Oh,
probably not the low. Do you think? Can't
yeah.
hear.
And I mean, it's really, it's interesting because there's one dynamic that's kind of floating out there, and that's the Trump card.
Yeah,
I wouldn't want to I don't want to count him out. You get a few of these tariff deals done. I don't see a deal with China happening anytime soon. But I think if you get a few of these trade deals done, I think you could see, and you see maybe some debt reduction, you see some real material progress in what he's trying to accomplish. I think the market will rip really hard.
do you think that we'll have different leadership if the Mag 7 they would participate but not lead? And I know a lot of people have been looking for small caps to lead for a long time. They haven't yet, but I saw a chart that showed small caps against S&Ps and even micro caps that are beginning to show some relative strength to the compared to the legacy indexes that we have.
Yes, now small caps. That's definitely the place you want to be coming out of a crash right now, but until rates start to get lower, I don't think they're a good spot to be. I think
Okay.
well, I guess I'll correct this one. You got to be more specific in stock picking. I wouldn't be buying the broader
Okay.
indices.
All right. So, what names and sectors do you own, and are you looking to get out of them on strength, or would you be adding if they continue to, meander or work lower again?
So in our kind of concentrated equity portfolio, We own just a few number of stocks right now, which is Philip Morris. We got
Okay.
that in there.
Defensive.
Yep, a little Costco. We just added MicroStrategy last week.
Okay. So is that your Bitcoin exposure through MicroStrategy?
Yeah, it's a 2% exposure. And then we also own Walmart as well right now. And I'm
Okay.
just staying in those stocks until the kind of long-term trends break for now.
Oh,
But that's, I mean, we have very minimal exposure right now to the market in general. I'm waiting
yeah.
for our long-term signal to flip back green to really start getting after it. But I like to kind of, be a little bit half pregnant in times like these in
Okay.
case we're wrong.
Yeah, I mean, this could have been the low. I actually, teach people about three drive formations. This looks incomplete to me, another low, and it would be very interesting. And retail would probably be the last thing you want to buy in front of
For
tariffs,
retail,
right? Yeah. But the chart looks
mm,
okay. It was the first to break down. I mean, it broke down before the market did. Maybe it's going to bottom before the market does. Could that be? This is a retail
I think
ETF.
it's definitely quite possible.
Yeah.
I think it's definitely quite possible I mean, that's a good, I think, indicator to follow. Um, just with retail and consumer spending.
How about Tesla? Uh,
See, I know that stock's got a really bad name right now, but I mean, Mag 7 stock down. I mean, how much is it down right now? 40% from all-time
yeah.
highs or something like
Yeah.
that.
Yeah.
Mag 7 stock, you got to think every single week we got 401k money. And I think it's like, I forgot what the stat is, so this is definitely wrong, but I think it's like a couple hundred billion every week flows into index funds. It's going right into the Mag 7 stock. I mean, you got a Mag 7 stock at 50% or 40%, discount right now. I'm not calling a bottom on the stock, but if you're a long-term investor, I
Right.
mean, and you've been waiting to deploy capital. And how many times have we been in a situation with Elon going back to like 2017,
Yeah.
2016, where he's over, it's never coming back. And then, 6, 12, 18 months later, the stock absolutely rips.
Yeah.
Uh,
He's pulled a
10x.
few Lazaruses out of his hat quite a few times. I know people that are real bullish on talking 500.
Yeah, in my
Tesla. Yeah.
yeah, and my mom's husband, Gary, actually worked for Tesla for about 10 years. So I'm pretty familiar with the internal ops. So it's kind of interesting to see how, when they're rolling out information on Tesla and like CNBC on how incorrect it is compared to what's actually going on inside
Okay.
the company. So I think that stock just gets a bad name through that. And you can't look at it like from a pure analyst perspective.
What's your take on the narrative that, we've had a big dollar decline and a lot of repatriation going on where people that came into our markets with American US exceptionalism now want to be long everything except America.
Oh, you kind of cut out on my side. Would you mind repeating that?
Yes, the fact that the dollar has declined and other global markets have been outperforming, like the emerging markets, during this dollar decline. Is that a secular turn, or do you invest overseas and look at things besides the U.S.? Have you?
Yes. Yeah. I mean, I follow kind of outside I kind of stick within the G20. I think that, Poland, EPOL is an ETF that we own right now. That looks really good, as well as Argentina. I think you could really get solid economic numbers coming out of both those countries for a while now. You got
Interesting.
accelerating GDP, maybe even a little bit of an inflation in both of those countries, which is good. Good. You want to own inflation in both of those countries, and Argentina and Poland. Emerging markets, broad based. I'm not. I'm bullish on emerging markets. We don't own it. I don't know if it's going to be a secular turn, because I feel like when the U.S. comes back, that's where all the capital ends up flowing to, just because we are the leader in the markets, clearly. but I wouldn't own like EEM or anything like that. I would get more kind of country specific with it, which is
Okay.
a lot harder and more of a pain in the ass to kind of manage. But
Do you have a symbol for that Polish ETF that you're in?
it's EPOL, EPOL.
Because I'd like some pierogies. So you know what they are, huh? All right. So here's EPOL, and you know I've read a lot of things about Poland really being kind of the engine of growth in Europe, even compared to Western Europe. Yeah, that's a nice chart. I'd be booking it though. Anyway,
with with
Poland's,
with out of country anything, I highly recommend doing that. Just obviously Poland's on something we got to worry about. Imagine like buying RSX,
yeah, Russia.
2020 or something. Yeah, something like
Oh
that.
yeah,
Sanctions
yeah,
on CBOE locks up, your
yeah.
goes to zero. So that's I always like to take smaller position sizes, be a little bit more cautious, and kind of lock in those trades.
Okay,
Or and then just kind of holding it like you would like any US core equity position. Just
okay.
because who knows? I mean, Trump could throw sanctions on anybody and then, you're screwed.
What's your take on China?
So with the investing in China, I would wait a little bit. I like Baba. We don't own it right now. We did for a hot minute earlier this year, but from a kind of tariff standpoint, I don't know if a deal will actually really get done. I think the first time he went at it, he did a decent job getting through that. But what a lot of people need to remember is translating the deal terms. Once you have a finalized deal terms with China, they then have to translate it into Chinese law and the actual Chinese language as well. And that takes a very long time.
Yeah.
So I would be surprised if we have a signed ink deal before the end of this term.
Okay. It could also be China probably wouldn't mind seeing our president twist in the wind about that as well, right? I mean, their population is more used
Yeah,
to
I mean
hard.
they're definitely patient.
Yeah, I mean they're more used to hardship. I don't know about you, Kurt, but when my internet goes down for a few hours, I lose it. So these people can go without food. All right, so they could probably weather this trade war better, and Xi's not up for re-election either, is he? Do you worry about anything geo, Kurt, that we have
Yeah, I'm
going
not
on?
definitely not a Chinese expert. I heard something that he might be getting. Oop,
Yeah,
go ahead. Sorry, I'm talking over
no,
you.
that okay. Anything that you like with commodity themes in it? You know, there we've had some huge bull run in the miners. Some of the copper stocks were doing well. Oil has been under pressure, but people like agriculture. Any themes that you see in equities that are commodity themes that you think have value here? Uranium,
Yeah, I
anything?
mean, obviously you have gold, and now we're kind of getting into that. Yeah, yeah. So gold, but I would still wouldn't go like levered long in the gold at this point because
Yeah,
if we do have a flight to safety trade, people are gonna have to free up capital
yeah,
during that. So I could totally see that happening. Now we're kind of getting in this rotation where you got the miners will start to take off. Now we're getting the rotation in the silver and silver
yeah,
miners.
yeah,
But those are I mean everyone likes gold now, and there's this long-term narrative that like it outperforms the S&P
yeah.
500, but I hate holding on to that thing for like long periods of time
Okay,
because it's not really correlated to anything. And when you're running a momentum strategy, I want to be in the things that are working. Um,
okay. And what are they today? What's working today? Nothing? Or holding up, showing resilience. I mean, if you're a momentum guy, you probably also believe in relative strength. That when you have a red tape, big red tape, you look for what's green. You have a real green tape, and then you look at what's red for possible shorting opportunities. So, what's holding up on a day like this? I know the S&Ps have already rallied back about 40 handles.
Yeah, I mean, we're holding on to a few currency ETFs right now.
Oh, what are they?
The
That's my
Euro FXE,
okay, like it.
the Japanese Yen FXY,
Okay.
Swiss franc FXF.
Okay. So you're
Um,
pretty diversified out of the dollar.
yeah, yeah,
All right.
those are yeah, and then we're holding some anti-beta BTAL. That's kind of my way of playing the inverse in our momentum strategy. I don't like to go outright short. Short and holding just doesn't work. I've never seen a back test that like shows that that works. So we kind of incrementally, I kind of like that ETF. So if we are wrong on the inverse side and the market rips up, we don't get our face completely ripped off
Yeah.
because it's just more of a market neutral type strategy right now. But short-term treasuries are also not bad as well.
Okay.
ETF, short-term treasury futures, two
It sounds to me like you're more
T
in.
UA is also something that I'm looking at as well.
Okay. It sounds to me like you have a lot of cash on the sideline right now. Okay. So it sounds to me some of your picks are defensive and you're treading lightly in this market right now.
Yeah,
But
yeah, and I mean I'm monitoring a couple my kind of recession dashboard, as you will, is the VIX. I don't know if you got that up.
yeah, I have VIX.
So what I did the last kind of late, probably early last year, well, kind of since 2022, I've been trying to boil down into a few key indicators that we saw in 2008, 2000. Because at one point I believe that this market really was highly correlated to 2008, especially during the summer of 2008, where 52-week high in the VIX has also preceded every single recession that was triggered August 2nd, 2024.
Yeah,
Um,
that was the unwind of the carry trade.
yep, that was a fun day. And then
Okay.
and then we had the snap back about 3 or 4 days later. And then the second one would be the yield curve, either
Okay.
the tens and threes,
Right. So
tens and
so,
twos.
so you think
And
do
specifically when I'm looking,
you think we're already in a recession, Kurt?
so with the yield curve, I'm specifically looking for both the tens and twos and the tens and threes spread to be bull steepened.
Yeah.
Uh, so,
So that
so
means
I think right now you got the tens and twos, but the tens and threes are a little flat.
yeah. So could the twos come down dramatically and the
So they're a little
20?
bit flat right now. So I would kind of say that that signal is potentially in progress.
Okay, could we have the short end of the market, which the Fed has more control over? I have rates drop and have the duration still see higher rates. Is that what you call a bull steepener? Did you hear that
Correct.
question?
Yeah, I'm not sure I quite heard you, but you say when yields drop. No, I didn't quite hear that.
No, the when the front end drops and the back end doesn't drop with it, the long duration doesn't drop with it, but could actually even rise with short-term rates falling. Is that a bull steepener or a bear steepener? You didn't hear me again either because I can't hear
Oh,
you.
correct. Yeah, so the tens and twos are bull steepening. You can't hear me either. Man, the connection's spotty. Um
Anyway, despite the technical issues, we got some good,
should we move on
you
to
know,
credit spreads?
yeah, credit spreads. Yeah, they're still blown out or they're coming in. I was surprised how much junk recovered. HYG.
Yeah, I mean that 52 week, yeah, I mean it jumped and then absolutely spiked back down. Now I think to check it this morning, it was, kind of slowly moving up again on credit spreads as
Yeah.
well. I mean, that huge jump is really what I was looking for. That was triggered. I think it was like April 2nd or so, 2025. I mean, that's another check on my recession box
Okay.
as a 52-week highs in credit spreads.
Okay, and they did blow out for the
And then
first
I think more
time.
importantly to watch actually that's not on my list is the is junk bond spreads.
Okay. Yeah, okay. So yeah, because they're I guess they didn't teach you learned this, Kurt, but don't they teach people that manage pensions that the higher the yield, the higher the risk? I mean, it's a pretty basic Econ 101 lesson.
I think so. I don't think they really teach a lot in bonds anymore at all, if I'm being honest.
Okay.
I'll give you an example. I was when I moved over when I started clearing through Schwab, I was trying to you know, figure out how to use their bond trading platform. This was a few years ago, and nobody knew what the hell I was talking about when it came to the difference between CDs and treasuries. And
Right.
I don't think they educate a lot of people on that as well as that in the options market
Okay.
as well. So I don't think they don't train financial advisors in much besides sales. You pass your test. It's not kind of you're kind of on your own when it comes to again, they don't expect you to actually manage money.
Okay.
So
Well, Kurt, I'm really glad that I saw your tweet that interested me, and I reached out to you to have a talk with you. I follow you now. Uh, it doesn't seem like you're that active on X, but I know after about 5, 10 minutes if someone knows what they're talking about. So, being on X and social media, what are you looking for? Are you looking for clients to move their retirement accounts to you, or looking for people to talk to for that, or subscribers for your letter? Where should we send people that hear us live and the recording later?
Um, yeah, no, appreciate that. Yes, you can follow me on X. I'm out here, just kind of it's kind of my brain dump of what I'm looking at in the markets. I mean, I'm always appreciate when people reach out and want to kind of interview to see if it makes sense to work together there.
Okay.
But follow me on X or go to the risk signal report.com and you can kind of get an idea of where my head's at on try to send out a report a couple times a month. Sometimes it's weekly, sometimes it's more than that. It's if I'm busy, I don't get it out on consistently all the time, but that's where I like to connect. And hey, the phone works. You can always give me a call. There's a phone number on my website, ivoryhill.com, or right
Well,
there in my X profile. You can actually schedule a meeting right on
can
my.
actually talk to Kurt. Okay.
Yeah.
As without phone prompts, a million phone prompts. So, it's great
Yeah,
meeting
yeah.
you. I hope you have a great 2025, Kurt, and ping me when you see something
Likewise, and I
important.
really appreciate having me on your show. And
Yeah.
yeah, appreciate it.
Yeah, so I enjoyed meeting you and talking to you about the markets, and learned a few things from you to boot. So you're now my trading warrior brother. You take that title, and next time our
Appreciate
technical
it.
all
Thank you
right,
very much.
our technicals will be better next time. So that's a wrap,
Yeah, we're
everyone.
just getting spotty. Oh man.
Yeah, so check Kurt out. Uh, you know, uh, look, when I talk to a guy who's in pension plans and handles retirement accounts, and they tell me they're in FXE and FXY, um, the currency markets, they're the center of the wheel, aren't they, Kurt? They're the fulcrum that everything spins around. Currency is pretty important. So I talk to a lot of RIAs that don't pay attention to FX.
And you can take
So
bigger position sizes because they don't carry a bunch of risk. So that's
yeah.
why I like being in currencies.
All right, everyone. Kurt Altrichter, thank you very much, Kurt, for hanging out with us for a while, edifying our community. Appreciate it, buddy. Thank you.
Appreciate it.
All right, that's a wrap, everyone. You can catch it on our YouTube channel, and I'll see everyone tomorrow. Remember, don't just count your pips or your shares or your currencies, count your blessings, and I'll see you in the room. Adios.